Hello, ladies. Welcome to today's session. This is BitQueens, and you are on to one of our sessions where we learn about blockchain technology and how it works and how that can empower us women. So today we are continuing our conversation on key metrics for token evaluation. Actually, the topic is token economics. Right? And we're looking at a woman's guide to smart investing in tokenized assets. This is our third training session in the series. And last Sunday, we looked at key metrics for token evaluation part 1. There are a number of metrics we need to consider when evaluating a token that we want to hold in our portfolio. So we had the first 4 metrics. We examined it last week. And today we're going to have the remainder to fully have understanding on the metrics to consider. That is, those things to look out for when you are actually picking out tokens that represent tokenized asset or backing an asset. And without any more time wasted, I'll just go straight and pull up my screen. Welcome, everybody. Welcome, Virginia, Charity, Ruka, I see you. Welcome, ladies. So let me just go up now and pull up my screen so that we get right into it. So do let me know when you see my screen come up, so I'm sure we are together. Okay. Can you hear me? Can you see my screen?
Yes, we can see your screen.
Okay, that's great. Thank you so much. So like I said, we are continuing our conversation on token economics, a woman's guide to smart investing in tokenized assets. Why are we actually paying attention to this topic? Now, token economics allows us to understand the viability of a token that represents the asset we intend to invest in. So if you want to understand the purpose of a project, of course, you want to understand the value that the tokens hold so that you can make informed decisions. If you want to understand the stability that will bring, how sustainable that project will be in the future, then you need to pay attention to token economics. Like I said, this is the third session in this series, and we are specifically focusing on key metrics in this conversation, key metrics. That is, what are those things to actually look out for? How do you value the token? How do you ensure that the tokens you're going to be holding have value, they're sustainable, there is a strong purpose behind it, and that it's going to give you returns on your investment? Because as an investor, at the end of the day, we're all looking to gain capital appreciation and, of course, improve our portfolio. So this is the mainstay of today's conversation. So if you're joining our sessions for the first time or meeting me for the first time, I'm Christy Manuel. I'm a blockchain educator and founder of BitQueens. At BitQueens, we're helping women learn about blockchain technology and how they can empower themselves with it. What we do here is to help you learn in the simplest and most fun way, right? We've found a way to demystify all those technical terms and details associated with learning blockchain technology so that it becomes easy for you, it's enjoyable, and then you can build the confidence and, of course, develop passion to begin to participate in the different opportunities that are available within this space. So you're onto one of the sessions where we help you learn, get deeper insights, get deeper understanding, have the right knowledge and tools so that you can confidently navigate the blockchain space. So welcome to today's conversation. And what are we going to be discussing? Like I said, we're going to be looking at key metrics for determining the value of a token that is backing an asset. And this is part 2 of that conversation. And at the end, we're going to interact. So at this point, if you have any questions or want to make any inquiries or suggestions or contributions, or areas you want us to throw more light, this will be the time. Feel free to share your thoughts in the comments as the presentation is going on so that others can learn from what you are learning or what's running through your mind. Of course, it will be interactive as designed. So with that said, let's get right into our conversation. So I'm just going to quickly point out what we learned the last session. Remember, we started on key metrics for token evaluation. That is what to look out for in tokens to determine whether they're valuable, going to be for the long term, if it's going to fall within your investment goals and things like that. So last week, we looked at token supply as one key metric. You want to understand what's the supply and what is informing the supply, right? We also looked at market capitalization, which is the value of the tokens that are already in supply. We looked at trading volume, how it affects the value of a token, and especially for the long term. And of course, we looked at token allocation. That's how it's distributed. What's the quantity that goes to the founders? What's the quantity that was sold during the pre-sale? What's the quantity that was sold during the main sale? What's the quantity that goes for staking? What's the quantity that goes to the team, the development team? What's the quantity that it goes for marketing of the project? What's the quantity that goes in for different other aspects of the project? So all these are the things we discussed last Sunday, and we have the link to that presentation already shared in the community. So if you missed it, it would be nice to catch up on that so that you also make sense of what we've been discussing. But with that said, we're just going to dive right into today's focus, which is the second part and the concluding part of this subtopic, which is key metrics for token evaluation. Remember, when we say token evaluation, we want to see if the token backing a particular asset you want to buy into has value, if it is sustainable, if that project will eventually be for the long term. You don't want to, put tokens in your portfolio that do not represent any value or may not be viable in the future, or maybe here today and tomorrow they lose value, and by that you lose your funds. So that's why we are observing all these things. Remember, token economics is really very important because it comes from the investor's perspective. What's in it for you? You are digging deep to understand the value behind the project. That's the value proposition, the unique solution they are providing, and why you should hold that token in your portfolio. So let's go. Now, continuing from where we stopped last week, the next thing you have to also consider, or one of the things you have to consider, is the token utility. In fact, this is by far one of the most important metrics to consider, because the token utility tells you the practical use cases, the functionality of that token, right? No, you can't just create tokens if there is no unique solution it's providing. For instance, if the token is backing a real world asset like real estate, right? You know that, okay, this is providing people access to participate in the real estate industry. So that's a unique value proposition. But the token itself has to have utility. Utility means use. How can it be used? If you have access to these tokens and you're holding these tokens representing that particular asset, right? Say real estate, for instance, what is the practical use cases? So as I hold these tokens, what can I do with them? Do I just buy the tokens and just hold them, right? So we're looking at its functionality within the ecosystem, right? So how can you perceive or judge what the token utility can be? So you want to know the purpose of the token. Why is it even created? Is it a token that is it created apart from representing your part ownership of that asset? Does it also allow you make payments, for instance? Does it allow you pay transaction fees with it? So if you want to transfer some tokens from your own wallet to another person's wallet, and you have to pay transaction fees, do you need to look for another token to pay the transaction fees, or the same token allows you, to pay the transaction fees? All you need to do, since you already have the tokens, just a bit of it will now be taken as transaction fees. So that becomes use case, right, for that token. A typical example is the Ether for the Ethereum network, right? It's both a currency and a token for paying transaction fees. So when you hear gas fees, for instance, on the Ethereum network, Ether is the token that allows you make that possible, right? Even on other projects that are built on Ethereum, there are some blockchain projects or tokenization projects that are on Ethereum. It doesn't, sometimes you need Ethereum itself to be able to pay for the transaction fees. Yes, I remember one, it's called Avinoc. Now, Avinoc has two versions because it has since migrated to another blockchain. But the ones that were minted on the Ethereum network, if you want to move it, it will require you to pay the transaction fees using Ether, right? So you see the use case for Ethereum, not just for its own currency, but for other projects that are built on it. So that is a clear use case. Now you want to also understand if the utility there is for you to access certain services. So for instance, let's say you were a frequent traveler with an aviation company that is launched on the blockchain, their project is on the blockchain. And so you use their services from time to time, you're a returning customer. One of the ways to reward you is to give you points. They call it loyalty points. But this company, because it's a blockchain project, gives you the points in tokens, in their tokens. So in this example, I would say Avinoc, for instance. So Avinoc gives you their tokens because you are a repeating customer, you use their services, or you are referring other users to their service, and so they're giving you the tokens. Now, those tokens can allow you access other services, apart from the fact that you've been given these tokens and you can just hold them in your wallet. It can give you access to swapping them to other tokens or other assets. So that becomes a utility. It can give you access to converting it, or maybe buying a drink or buying a cup of coffee or buying a dress or something like that. So you want to understand, does this token give you access to other services, right? So a typical example is the field token for the file network. So if you have this token, it allows you to pay for storage on the Filecoin network, which means apart from holding the coin, if you want to gain more storage, maybe for your data or personal information, and whatnot, you can still use the same token to buy some storage. So this becomes another utility, giving you access to more services than ordinarily you would have gotten. So you want to also know, does this token give me access to governance? Now, governance is a situation where those holding the coins can make certain decisions, can contribute to the development or update or improvement of a certain network. So some tokens are called governance tokens because they allow you to contribute to the upgrade and update of that particular network. So more like giving you voting rights. So those who hold the tokens can vote on certain developmental initiatives, as it were. So you want to know if that token is a governance token, if it gives you the right to contribute to the betterment of that project. A typical example is MakerDAO. It's a decentralized autonomous organization. We would eventually treat DAOs in our coming sessions. But this is a typical example of a token that allows holders to vote on upcoming events, updates, and activities within this network. Another thing you want to consider is, does the token allow you stake and get rewards, right? Staking is more like fixed depositing your money. Like in our traditional banking system, right? You can have money in your account and say, oh, this money, I don't want to take it out now. I just want to keep it for a period of time, say 1 year. So you go to the bank and say you want to fix deposit your funds. They give you the percentage increase, meaning that within that period when it is locked that you cannot have access, they give you a certain percentage increase on top of what you already have. So let's say you are fixed depositing $1,000. They can say the interest rate for 1 year is 5% or 3% or 2%, as the case may be. So which means that at the end of 1 year, you get 2% extra of what you've fixed deposited. The same thing happens in the crypto space. So staking allows you fixed deposit your tokens, as it were, instead of holding them idly in your wallets. They help to generate you more tokens. And this also helps to keep the network secure, to contribute to the development of the project and all that. So you want to know if that token, besides backing an asset, also allows you to do staking. Then for rewards, it could be that the project has a reward system, maybe for those who are constantly referring their projects to other people. And so they can pay you in the tokens as rewards for helping others learn about their project. So you want to know the use case that the token you are actually looking to add to your portfolio has. So these are different utility that can come up for different tokens. And you've seen the examples here. Evinoc is one of them. You can actually stake Evinoc. Ethereum 2.0. This is the new version of Ethereum 2.0, and it allows you to stake. So when you stake, you lock up your tokens for a period of time, and then you get rewards. And of course, there's a staking period. It could be 1 year, it could be 2 years, it could be 5 years, depending on what you agree. Cardano is also one of them. I've been able to stake Cardano in the past, right? So you want to also know if that token serves as a means of payment, like Evinoc, like Cardano, like Bitcoin. These are coins or tokens that allow you make payments. So it's important to know the utility, right? So if you find a token that represents an asset and you're interested in participating in that project, that tokenization project, find out what are the use cases, the different things you can do with the token, or the different value apart from backing that asset that the token can offer you. That's just what this is trying to, help us understand. So how do you evaluate? Now you've known that, okay, this token has different utilities. How do you evaluate? What exactly should you look out for before you now decide on having that token as part of your portfolio? For instance, you want to know if it has numerous use cases, right? A token can just have one use case. It might just be for staking and that's it. Some tokens might just be for governance and that's it. Some can just be for payments and that's it, right? But some can have multiple, use cases. So you want to understand if it has multiple use cases. If it has multiple use cases, it even brings more value, because there is always one way or the other to put the coin or the tokens in use. And the more people use a particular token that is backing an asset, the more value it brings to that project, which means in the long run, it's going to translate to stability for the project and, of course, price appreciation for you who is participating. So this is a very key thing to consider when evaluating token projects. So the more use cases it has, the more valuable it becomes over time. Then you want to learn more about the user demand. Of course, the use case will drive the demand. So the more the demand, the higher the value. Of course, the supply has to be in such a way that it does not overwhelm the demand. Because if the supply overwhelms the demand, that is, if you have more supply than the token is being demanded, then it's going to pull down the price or the value of the project or value of the token with time. So you want to know what's the demand for that project. Now, you also want to know if it's a governance token, because it now allows you the opportunity to participate in making that project better with time, right? You can vote on decisions that will improve the quality of that project and the value it brings and the long term. Of course, you want to understand how integrated it is in the ecosystem. Let's take ETH, for instance. ETH is a token, actually, even though it can also act as a coin for the Ethereum network. It still acts as a token. So ETH is one of them. You can do a number of things with ETH. It allows you pay for gas for transaction, smart contracts that happen that are very essential for tokenization projects, all right? ETH can also enable that, right? Then execution of staking, like I've already described, also can be seen with ETH 2.0. Remember, I said ETH has a transition from ETH, normal Ethereum or Ether, to ETH 2.0, where it moved from being a proof of work project to a proof of stake project. So we're going to be discussing consensus mechanism. Just understand that they move to a better way of validating transaction and, of course, reducing costs and all that. So don't think too much about it. When I say proof of work, proof of stake, we'll eventually discover it. So the second version of Ethereum, that's ETH 2.0, allows for staking. So you can see multiple activities that one token can be used. So it just tells you that this token is well integrated into the ecosystem. Another example is BNB. BNB is Binance Smart Chain token. If you trade on the Binance exchange, Binance token can be used to pay for the charges. Even if you're trading Bitcoin against USDT, or you are swapping Bitcoin for USDT, or you are swapping Solana for Ethereum, if you have BNB, it allows you pay for transaction fees, which are relatively cheaper than if you were paying with your Ethereum or paying with your Bitcoin. So you can see how this becomes, there's multiplicity of use cases well integrated into their ecosystem. Of course, Binance allows you to participate in Launchpad, right? The BNB token allows you to participate in Binance Launchpad. So Launchpad is where projects that have not gained publicity, more like incubation period. So that's where they get investors, venture capitalists, people who have big money, or people who want to get in on time on that project. Binance Launchpad is where you find such projects. Projects that have unique selling point, they have value, but they are not yet popular. People don't know them yet. So it's more like an incubation where it's in development, but people are still allowed to participate in those projects in good time. So Binance has that. With BNB, you can participate in such projects. In payments also, you can use BNB. So you see the multiplicity of use cases for Binance, and you can see that it is well integrated in their ecosystem. Another one is Mana. Mana is for Decentraland, allowing you to take advantage of the metaverse, right? We've talked about metaverse in one of our conversations. Metaverse is virtual world, virtual representative of our physical world. Everything you see happening in the physical world, people going to work, buying lands, making friends, shopping, and all that type of stuff is also in the virtual space, and it's called metaverse. So the word meta means beyond. Verse is taken from the word universe, so beyond the physical, beyond what you can see. So with this token called Mana, you can buy lands, you can shop, you can have access to different goods and services. So this token is well integrated into the metaverse. So if you want to hold it now, you can see the value it is providing, and then you can decide that, oh, this token has use case, it has utility, I can now hold it in my portfolio. So these are the things you need to check out for when evaluating token utility. Remember, we've just described what token utility can be. It can be for staking, it can be for payment, it can be to access different services, it can be for governance, it can be for all kinds of things, right? Depending on the project. So you want to see how that pans out before making an informed decision. You also have to assess its future utility. So you go back to the roadmap, the development roadmap, and see what they have in their plans to bring more use cases. Because I tell you what, a project can just start with maybe one use case or two use cases, but with time, they keep adding more use cases. So you need to understand what's the future utility for that particular token. So if it's just one or two, but the project is solid, it does not mean, oh, let me discard it. No, you can actually study what they are planning ahead and see if it allows you make informed decision. Of course, you can assess what the community sentiment is, what the developer activities are. For instance, how constantly are they updating their projects, and all of that. All this will also help you make informed decision, right? So let's move ahead to the next key metric for today, which is token liquidity. Token liquidity. This is another very key metric to observe keenly, because it has a lot to do with the value that is locked within that project. By value, I mean how much already is stored in that asset. So this refers to the ease tokens can be sold or bought without causing a fluctuation that is significant in the price. Let's say you have something you want to sell. If it's easy for you to sell something, it means there's liquidity, right? There is somebody who is waiting to buy. That's what it means. If you want to sell it and you are just finding it difficult to sell it, it means that there is no liquidity, meaning that it's not easy to find somebody who is available to buy, readily available buyers. That's what it means. And so sometimes this can be a challenge, because those who eventually are willing to buy may manipulate the price. They can, offer you something less than what you're willing to sell, right? The same thing is applicable in the crypto space. So the ease at which you are able to sell off your tokens or buy without making significant impact on the price is what we call token liquidity. For instance, you hear of whales in the blockchain space. Whales are people who hold large amounts of particular tokens or coins. Sometimes when they sell off, you just see that the token's price starts to drop significantly. So that's to tell you that this particular project has high volatility, right, in terms of price, because just because someone sold off, the price is already dropping. Or just because someone bought a large quantity, the price is already going up. So this is one thing you should really consider. How frequently does the price fluctuate because somebody is buying or selling? This is really very important, because if you have a project that is relatively stable in price, not because tokens or coins are expected to be stable in price, we know that they fluctuate, but the impact is not significant, then it gives you, some sense of ease, especially for investors, that, okay, this will not just drastically, move up because someone bought a large sum, even though most of us like situations like that. But as much as coins go up sharply, also remember that they can come down sharply. So you don't want such spikes in price suddenly. And it might be when you're not even paying attention, the price suddenly goes up, and then before you know it goes down. You're not even maybe online, you're not aware of what's going on. And then before you realize what is happening, those who have made profits sell off, and then you are left to lose your, the value of your tokens, or your tokens are worth less. So you want something that is relatively stable, but still appreciating, right? Even if it fluctuates, it's not sharp or high spikes in price. This is really important. But for those who trade, for instance, I know would love this kind of movement, but those are for experienced traders and all that. So what are those things to look out for when evaluating token liquidity? Look at the average trading volume. That will give you an insight. If the trading volume is high, it shows you there's a lot of liquidity, which means people are buying and selling. So that can give you confidence that this project is not an idle project, right? People are actively participating in this project. So that's one of the advantages of, seeing everyday trading volume. Sometimes the trading volumes can go up a little more. Sometimes the total trading volume can drop. But, if it maintains an average, then it allows you make informed decision whether you should have that token in your portfolio or not. Then we have the bid-ask spread. There's what we call bid. Bid are those who want to buy. Ask are those who want to sell. So if the difference in the highest bid, that's the highest amount somebody is willing to pay, is significant in relation to the lowest amount anyone is willing to sell for that particular token, then it affects liquidity. Right? It affects the trading in that aspect, because bid-ask spread has to do with trading, especially when you go to all these exchanges and all that. You see, those that are bidding, you see them on one side, those that are asking, you see them on one side. So if the spread is wide, it will affect token liquidity, meaning that there will be a drop, because why should I buy from you if yours is high and there are those that can sell lower, I can get it lower from, right? So that will affect the liquidity. It might drop, basically. That's what I'm trying to explain. Then another thing to consider is the exchange listings. The more a token is listed in different exchanges, the more liquidity it has, because it means that more money is tied in, people are actively trading it, people are actively buying and selling it. And so all these are things you need to consider when doing that analysis on token liquidity. Remember, it is how efficiently and how quickly you can buy a token or sell it without significantly affecting the price. Now, what's the importance of this? Why is this important? Because it allows you study the market efficiency. You want to know if that token fluctuates too much or not, because you have to be sure that this token is not the kind of token that wakes up one morning and it's just going crazily high. And like I've told you, cryptos or tokens with high volatility can also lead to loss in terms of sharp decrease in the price of the token. So you want to also know that. Then it also allows you to manage the risk. Does this align with my investment goals? Because all these things comes with risk. So definitely it allows you monitor your risks. Then flexibility, because you can go in and out. Entry and exit becomes seamless. You are not hooked to a project because you cannot find someone to sell the tokens off to. Some projects are like that. I've seen a number of them, especially on all these decentralized exchanges and some of these centralized exchanges, right? What happens is you would have people who hold these tokens in large number, but there are no people willing to buy. the tokens. And even those who may now be willing to buy will give you prices that are very outrageous, that you know that selling at that price just totally means that you are selling at a great loss. So this gives you flexibility. You know when to enter the market and you know when to exit. You are not stuck in that project because there are those willing to sell, but none willing to buy, right? So, or those willing to buy, but none selling, because it goes both ways, right? So that flexibility allows you evaluate tokens backing that asset, and you decide whether you want to have it in your portfolio or not. Now, let's go ahead to the next one. Token price volatility. This is directly tied to the value. So if a project is bringing value, it affects the price. So price volatility is one thing you should consider. So it shows you to the degree at which the price of a token is going up or coming down over a period of time. There was a time in 2017, the price of Bitcoin went from $10,000 to $20,000 suddenly. And before you know it, it dropped from that $20,000 to $3,000. That was around 2018, sorry. That was just there about when I was getting into my journey. So you can see how volatile the prices can be, but that was even before it gained the kind of adoption that it has gained now, right? So you should expect some of these, especially for tokens that are just coming out or may not have found a lot of use case, or may not have found a lot of community backing it, as it were, or investors participating in that project. So situations like this are not abnormal, but that's why we're doing this training, so that you can weigh your options very well and make informed decisions. So token price volatility refers to the rate at which a price moves. Let's say a price moves from its current price to, let's say, 20%. It does 20%, appreciation, and then in the next couple of days, it drops to 2%. You can see how sharply that dropped. That may be a reason for you to really consider, but not that one event or one happening is enough for you to conclude. So you may need to watch and see how this happens over a period of time. So this is very key in evaluating a token that you want to have in your portfolio. So how do you evaluate it? You see what I was saying? Check the history of the price movement. So that one event should not just, be your way of concluding. You have to look at the past and see what it's been doing. There are times that events spike price, maybe news, sentiments, what's happening, spike price. But you don't want to depend on that alone. You want to actually see from history what it's been doing. If it's been appreciating in value with time, then it may not be something to be worried about for the time being, since this is just more like one-off event, or there is something informing that sharp price movement. So you have to follow it through from when the inception, when the project was launched, when it was listed. Of course, I've said news, social media, talks and things like that. I remember when Dogecoin came out. You remember Elon Musk, the CEO of X, formerly Twitter, right? There was a time he made a tweet and Dogecoin moved crazily high. But after some time, it also dropped. So you can see how news, social media influencers on particular projects can influence the price or inform the movement of the coin, either in the upwards direction or in the downwards direction. So you want to see, are there figures or influencers who are actively participating in these projects? What are they saying? What are their followers saying? What's the sentiment, community sentiment, as it were? So these are areas you need to analyze when considering a token you want to put in your portfolio as regards price volatility. Because if a coin goes up crazily high in terms of price, there's also the likelihood that it can drop sharply. And of course, it depends on the projects again. Value will always stabilize price. If that token has no value, solid value behind it, it will just be speculative, meaning that people just want to trade it or, just make money and, move to the next thing. That's why you need to consider the value. I keep saying that value will always inform the numbers. If there is a value, solid value and proposition or use case for a token, it will eventually inform the price and it will give it time to mature. You will not be seeing all this spike price. The project will be maturing gradually, howbeit in the positive direction. So this is one key metric to look out for when evaluating a token backing an asset that you want to include in your portfolio. Why is this important? Because it allows you to assess the risks. High prices can give you high returns, but in the downwards direction, that could also mean a loss. Then market perception. This is where investors will now check. You and I, investors like you and I will now say, oh, if this coin is having high fluctuations like this or high volatility, I may decide not to go in, right? I may decide to leave it and look for the ones that are less volatile. So it just allows you weigh your option. There are those who have put that for high risk investments. So it just allows you decide what your investment goal is. Do you want to hop in on high risk, high reward projects, or you just want something that the volatility is low, you don't get much, but still you're happy to follow the project, and this will also inform the long-term sustainability of that project. So it just gives you the opportunity to weigh your options and decide what you want to do. Then for those who are into trading, they might like the quick spike in price because it allows them make quick profits on the price difference when it comes to price movement. But again, that can also mean that if their strategies are wrong, they could potentially lose their funds as well. So if you are trading these tokens, you have to draw up a strategy that allows you to stay profitable in the markets. So what are the factors that affect token volatility? If the demand is more than the supply, then definitely it will stabilize the price in a way and of course push it in the upwards direction. What influencers are saying, regulatory developments. If the news is favorable, then it will inform upwards direction in the entire crypto market and by extension, the particular project in which you're looking to take advantage of. Market trends, what's happening? What's the narrative, right? Are we talking about meme tokens now, or we are focusing on tokenized projects? Every market, especially now that we are still in the bull run, as it were, has narratives, right? The most pronounced narratives now as we speak are meme coins, tokenized assets, some of these layer 1 projects and specifically layer 2s, the narratives that are pushing seriously now. So you want to weigh those trends to see where you can fit in yourself and of course take advantage of the project. But just so you know, value is all you should be considering most of the times before making informed decision. Don't just go for price movement appreciation or because this token is going up in price. Let me just hop in on that. Ensure that you understand the value proposition and how that leads to sustainability of the project in the long term. Then liquidity, we've already mentioned, if there is liquidity, then it will help to stabilize. Poor liquidity, if there's no liquidity in the project, the price will be volatile. That is, there's a likelihood of manipulation in price or prices going up. But if you have liquidity, it sort of stabilizes the price, not because the price cannot fluctuate, but the high spikes will not be evident as you normally see if there was no liquidity. Then speculative trading is another factor. When people just want to cash in on sharp price movements of tokens, that can even lead to further price hike because people are just trading speculatively, no value per se, but they just want to cash in on that opportunity. And after that is done, what you see is that the price can drop sharply, causing loss for those. We may not be talented enough as it were, or may not have understood their strategies for holding such tokens. Then technological developments can also affect. If there are more updates and more upgrades and more innovation coming to a project, it will boost the sentiment of users and investors, which will translate to buying more. So if you are taking part of a project and you see that the project is advancing, there are new upgrades, updates, events, more use cases, you are most likely to want to buy more. And so the more people use a token, the more the price appreciates. So all these are factors that can, affect price volatility of a token, whether to the upwards direction or to the downwards direction. So let's look at the last one before we round it up for today. We're talking about token model. Token model basically is how the way that the token is designed, how it's issued, how it's managed, how it's distributed, and all that, right? So, but in today's conversation, because this is really very large when it comes to token model, this can be very broad. We just want to focus on two things, which are the inflationary and deflationary mechanisms of the token model, right? So there are tokens that are inflationary in nature. Inflationary means that they keep increasing in their supply with time. Those that are deflationary are those that reduce in their supply with time. So you want to consider what type of token that is. You've seen a project, you've seen the tokens backing it, and you want to have it in your portfolio. You want to know what type of token that is, if it's inflationary or deflationary, because in the long run, it's going to affect the overall value you get, the overall price appreciation you get, or returns on investment that you will get. So let's look at a number of them. What informs the inflationary nature of a token? For instance, if these tokens are paid out as staking reward. So now inflationary tokens can be of two types. We have those ones that are capped. Capped means that they have a finite number. They have a hard number or a fixed number. For instance, Bitcoin can only be 21 million units. It can never be more than 21 million units, right? So in this case, Bitcoin is both inflationary but capped. Inflationary because the supply keeps increasing. How be in a deflationary manner? Because through mining, certain numbers of Bitcoin is released. But you see that it is released in a depreciating manner. The last time it was 6.25, now it's 3.125. So you can see how that you just want to, some of them are in between. They are hybrid, meaning that they could be deflationary and inflationary at the same time. So what informs inflationary tokens? That is why projects design their tokens to be inflationary, is because they need to keep paying out staking rewards to incentivize those who are participating in the staking. And you know what staking does to a project? First, it creates a limited supply so that the project has time to develop enough and appreciate in value. So if that token is inflationary, it could be as a result of paying out staking rewards, or due to mining activity, like in the case of Bitcoin that I've just explained, or in the case of minting activities where users have to mint the tokens every day. Recently, you see people tapping their screens and all that, projects like that. They are minting the tokens, they have to do certain activities. There are other projects, that are backing real world assets that you gain access to their software and it allows you to mint their tokens every day. You don't even have to tap anything, right? This is just how it is designed, part of the smart contract design. Like Layer K, that's the blockchain backing some of these tokenized assets. They allow you opportunity to mint the tokens every day. So whether they have cap, that is a total supply or fixed supply or not, they can be inflationary, because with time, new tokens are introduced into the circulation, expanding the supply. So Ether is one of them, Ethereum, not 2.0. right? Because 2.0, the second version of Ethereum, is working towards making the token deflationary, right? The normal token that worked on proof of work, right, is inflationary. It doesn't have any total fixed number, but as a way of incentivizing validators, takers, it has to just keep paying out new tokens. Dogecoin is one of them. It has no supply whatsoever. Polkadot is one of them. But one of the reasons behind it is to incentivize validators on their network and contributors to their network. Solana is the same. It doesn't have any number, although it has an inflation rate of about 10%, meaning that every year it releases about 10% of tokens into supply. So at least this is calculated. You can sure of the rate at which it's being released, and that way you can make your informed decision. So this is just for the inflationary tokens. I want you to understand the ideas, what you should be thinking when you are making this analysis. Then we have deflationary tokens, like I've said, tokens that reduce their supply with time. We have B&B. There's what they call burns, right? Quarterly burns. So what they do is every 3 months, they use the transactions fee they've collected, part of the transaction fees they've collected from different activities happening on their network, to buy a certain quantity of B&B from the market and put it in a wallet that destroys it, that makes it impossible for anyone to use, thereby reducing the supply. So in this case, B&B is deflationary because by this method, they keep reducing the supply. And what this does is that it appreciates, brings the price of that token up with time. What inflation does is, if it continues for those tokens that are inflationary, it will eventually drop in price. That is the value. Deflationary will increase the price of that token with time. But still, these things have other angles to look at them from, right? If a token is inflationary, it means that more people can participate, because the more people that join the network or join that project, there will be more tokens to pay out to them, which will increase user participation. But if a token is deflationary, it means that at some point it will be so small that you will not even have enough. And those who already hold it may even decide to start hoarding it. And when you hoard it, it means there will not be liquidity because there is no activity. We are hoarding the tokens. We don't want to sell. Those who want to buy are there, but they don't have opportunity to buy because those who already have are hoarding. You can see it decreases the activity that is happening. So you see, whether the token is inflationary or deflationary, it both comes with its advantages and drawbacks. So you want to weigh in on all these things before deciding it, right? So we have the EIP 1559. It's a burn mechanism that was, introduced into the ETH network. I told you that Ether is inflationary. It doesn't have cap. It just keeps issuing out new tokens. But this mechanism, which is the EIP 1559, a part of the fees collected as gas is used to buy the ETH token and destroy it, right? Destroy means they put it in a type of wallet that makes it useless. You can't use it, nobody can use it, thereby making it deflationary. Then ETH 2.0, that's the second version of the Ethereum network, right? That allows for staking and all of that, is also deflationary, because by staking it, you're reducing the supply. It just allows to reduce the supply. And I tell you what, you can stake for up to 2 years, 3 years, 5 years, just depending on the contract you're willing to sign. Bitcoin is deflationary because at this point, the number of tokens that are being released, or coins that are being released every 10 minutes, that is after every new block is formed, is reducing. It started from 50 coins from its inception, right? 50 to 25 to 12.5 to 6.25 to 3.125. So you can see how the quantity of tokens that are given to miners for participating in the integrity and security of the network keeps reducing. So in this sense, Bitcoin is acting as a deflationary token, right? Cardano 2 is one of them. It gives you the opportunity to stake, which reduces the supply. Of course, they also have a way of reducing their supply through bonds, right? So this is a very key metric to consider. Token model. You want to know if it's inflationary in nature, if it's deflationary in nature. If it's inflationary, what advantages does it come with? If the advantages outweighs the disadvantages, maybe you might be willing to go for an inflationary token. But the disadvantages outweighs the advantages, then it might make sense to go for a project that is deflationary, right? So all these are the things you need to weigh in on before deciding that a token will be part of your portfolio. So how do you evaluate these mechanisms that we've described, right? You want to know the inflation rate. Inflation rate is the rate at which new tokens are introduced. I gave you an example. Solana does about 10% per year. Actually, it started as an inflationary token. It was just releasing. Now they are trying to cut down on the quantity they release at a time. So it's about 10% per annum of the tokens that are released into the markets, as it were, right? So you want to check that, because this will help you weigh in on what this will eventually be in the long run. Whether if it continues at that rate, if it will dilute the value of the token you are holding. By dilute, I mean it will no longer be worth much in the future. That is, it's going to be worth less and less with time. Just like our traditional fiat currencies, where the governments wake up and they just keep printing and printing, right? And so it's worth less and less. And that's why globally there is inflation, too much cash chasing just few goods and all that, right? So you want to also know the rate at which it's being taken out of the system or supply. That's what the deflation rate. Because if this continues, it will come to a point where new users may not be able to come in, participate in that project because the tokens are not enough. Those who hold are holding because they just want the price to be going up, and no particular activity that is bringing value or use cases that is bringing value that will be seen, because people are just holding the tokens for price appreciation. So the balance has to be struck, between these two. Then token distribution, especially for the inflation. When inflation happens, in the context of what we are discussing, it means that new tokens are being added. So you want to know where the newly added tokens are going to. Are they given to those who are staking their coins or going to the development of the project? Those newly created tokens, where are they going to? So this will allow you know if it meets your own criteria for being in your portfolio. Then the supply cap. You want to know if it has a fixed supply. I told you that a token can be inflationary, but still have a cap, a fixed supply, right? In the case of Bitcoin, for instance. But this could eventually mean that when it gets to the maximum supply, it can now turn from being an inflationary token to a deflationary token, right? So this can also affect, based off of what we've discussed, for inflationary tokens and deflationary tokens. That's the advantages that come with that. So you want to weigh in on this. Are you going to go for tokens that are inflationary but have cap? That's they have a fixed amount of tokens that can ever exist, or you want the one that has no cap, right? Let it just be inflationary so that more users can participate, and of course it can have more use cases and all that. So you need to evaluate this before making an informed decision. I also said that some tokens can be hybrid, right? They could be both inflationary and deflationary at the same time. We've seen how this played out for Bitcoin. We've seen how this played out for Ether. On one hand, it doesn't have a fixed number, yet it has a bond mechanism where the fees are used to buy off excess of the tokens from the market and destroy. So you can see the two mechanisms playing out here. So you want to decide whether you want to go for hybrid tokens, right? You want to go for hybrid tokens. Both mechanisms are playing out so that you balance the risks or potential risks that may come out of that project. So those are the things to factor in when looking at the inflationary and deflationary mechanisms of the token you are purchasing. And with that, we come to the end of today's session. I hope you got value. We looked at key metrics for token evaluation, part 2. We looked at token liquidity, we looked at token price volatility, we looked at token model, speaking of inflationary and deflationary mechanism. So it was nice to have you join us in today's session. We've talked about token supply in the past. Remember, in our previous session, we talked about how token supply affects the price, market capitalization, how it affects the price. We also looked at distribution of the the tokens, how it affects the token project, those that are going to the founders, that are going to maybe the marketers for staking and all that. So if you missed that first session, it was an insightful conversation. I encourage you to go back to our community. We have the link to that event already posted there, so you can go there and catch up. Of course, this is recorded. You can always watch this again to get deeper understanding and to help yourself make informed decision when taking advantage of tokens that are backing real world assets. Thank you, ladies, for being here. If you're enjoying the conversation and you're not yet part of our community, this will be the time to do so. All you need to do is to scan the QR code on your screen or write us at info.bitqueens@gmail.com, and we'll give you all you need to be part of our community. As you can see here, we are learning about blockchain, we're learning about cryptocurrencies, about Web3, and how we can empower ourselves with it to learn how to take advantage, to make smart decisions, and to benefit for our participation. So it's a community you want to be. We hold training sessions like this every Sunday. Of course, we are going to be introducing another training session in no time where we get to give you the opportunity to learn more and to benefit for your participation. Yeah, so if you're not already connected with us, please do so. Our social media handles are displayed so you can screenshot this page, follow us, and if you need to make any inquiry, please feel free to give us that feedback on info.bitqueens@gmail.com. We'll be there to provide you with the answers that you need. If you want to collaborate with us, you want to sponsor an event, please feel free to also write us info.bitqueens@gmail.com. So with that said, it's time now to get your feedback. Any questions, any contributions, any suggestions? This is the time to do so. So I'll stop sharing my screen now so that we get started. All right. Thank you, ladies, for being here up until now. Our conversation has been key metrics for token evaluation. The main topic in this series is token economics, a woman's guide to smart investing in tokenized assets. And we looked at the reason you should pay attention to the tokens, besides other investigation that you might do on a project before picking it. Token economics informs the value that that token actually is bringing. You want to know the value proposition. You want to know how sustainable that project is. All these are information you find out in the nature and behavior of the tokens. That's why we narrowed in on token economics. Yes. So in fact, this is our third conversation on token economics, right? We started off the first time by describing what token economics is. It tells you the economic aspects, what is in it for you as an investor when taking up a tokenized project, right? We looked at how it is designed, the model, how it is managed, everything about it. That's what token economics is, right? So we looked at the types of tokens. We also looked at the different utilities that a token can carry. For instance, is it used for payment? Is it for governance? Is it for staking? Does it allow you pay transaction fees and all that? So it was such a fantastic conversation. And if you yet to catch in on those, that's the first part. And the second part, do yourself some good. We have it already running on our YouTube channel to catch up. You don't want to miss anything in this conversation. In our subsequent session, we're going to focus on staking, because it's one major aspect of token economics people are not really taking advantage of or may not be understanding fully. So look forward to a conversation on staking in our subsequent session. We will demystify everything that you need to know about staking and how that can even improve your participation in a particular tokenized asset. So let me stop talking now and allow you make your own contributions. But I thought to fill us in on what we've been doing since we started this conversation on token economics. Yes, Angela, I see you. Welcome. Ruka, Anioma, Naomi, Obiocha, Mrs. Oge, Coach Oge, and Nene, it's good to have you. Virginia, Laura. I'm at the chat now. Angela says, thank you, Coach Christy. As always, this was very informative. Your depth of knowledge is quite inspiring. Thank you so much. I'm happy you are getting value for your time here. Thank you for your kind words. Obiocha says, thank you, Coach Christy, for a wonderful session as always. Virginia says, today's session has really opened my eyes on how to make better decisions when taking a tokenized project. Thank you, Coach Christy, for the value you bring to us on this platform. Thank you so much for your kind words. Oge says, thank you so much, Kincaid. Yes, the pleasure is ours here at BitQueens team, making sure that you get value for your time. Of course, you're learning, you're getting smarter so that you can participate and benefit for your participation. So are there questions, maybe experiences you want to share or contributions you want to make before we call it an evening? Yes, Anima says, I have a question. Please go ahead. You can unmute yourself and speak, madam.
Good evening, everyone.
Yes, good evening.
I'm happy for today's tutorial. Very exciting and eyes-opening. Please, on what you have taught us so far, I want to ask, we heard of a hybrid token, either deflationary or inflationary. From what you have taught us, what do you think? Which one would you think will be better? Is it the hybrid one or deflationary or inflationary token? Thank you. That's what I want to know, because you taught us of that hybrid. Hybrid had to carry the two together, but hey, we have inflationary separate, we have deflationary. So which one will be better for the three of them? Thank you.
All right, thank you, madam. That's an interesting question. So like I've already described, inflationary tokens are the ones that increase in supply with time, not necessarily in terms of price, right? Just the supply, the quantity that gets released into circulation increases with time. And that has direct effect on the price, because if it is released too fast, more than the demand for it, the price starts to drop. Therefore, the deflationary tokens are the ones that reduce the supply already, maybe through burning, mechanism and all that, or through staking, as it were. Hybrid combine the two. So what will matter first when choosing a token? Like I've said, consider the value that it is bringing, because it is the value that will sustain the price in the long run. A token can be inflationary and moving upwards in terms of price. Of course, people will now be jumping in because the price is appreciating. Remember, inflationary tokens mean that more supply is coming in. Because more supply is coming in, there is more tokens, for instance, to incentivize those that are staking, that are participating, that are doing one thing or the other, one use case or the other. Let's say you're using their service, or you make referrals. They give you rewards using the token. So there are more and more of the tokens in supply. If the value behind that project is not it, I mean, if it doesn't have a solid value proposition, that's what I mean, it will drop eventually in the long run. Let's take, for instance, Ethereum. Ethereum has these two features, like it's inflationary, right? Because it doesn't have a cap. Yet it's deflationary in nature, because it uses part of the fees it gets from transactions that happen on its network to buy off tokens from the markets to destroy it or reduce it from the supply. So, but will you say that Ethereum is not a good project? I will have Ethereum anytime, any day. I wouldn't even think about it. I wouldn't think twice about it. Why? Because Ethereum is providing value. It has allowed decentralized applications are built on it. Decentralized autonomous projects are built on it. Of course, tokenized projects can happen on Ethereum because it has a smart chain to do so. There are thousands of projects that started off on the Ethereum network. That is why, despite being inflationary and of course having that a bit of deflationary feature, the price has been appreciating. When it was first launched in 2015, it was only 4 cents. Today is 3,500, right? So what informs the sustainability of any token you want to buy as an investor will be the value proposition. If the value is there, real use cases, not just for speculative purposes. There are tokens that are designed for speculative purposes that people just buy and sell, right? They trade quickly, they make, especially the meme tokens, the meme coins, they are just for for fun, for joke, or maybe social experiment, like Dogecoin, what you call them again, Floki Inu, Shiba Inu, Wakanda Inu, and all that type of tokens. These tokens are just social experiments. They do not really hold any value, at least not now, not yet. Maybe in the future, they will find real use cases. So I can't say specifically, this is the name of the token that you need to buy, but I can tell you what to look out for. Because at the end of the day, you have to decide for yourself what you're looking for. I've given you the upsides and downsides for each of these type of tokens. For inflationary, it incentivizes users, and so more users can come in, and then the price can keep appreciating. Because the more adoption you have for a token, the likelihood it has to appreciate in price with time. But if that value is not solid, after some time, it will start to drop. Right? Ethereum, in my example, has measured up to this. Another one is the deflationary. If it's deflationary, yes, it means that there's opportunity for the prices to appreciate because there is no too much supply that will dilute the value. But at the end of the day, if it becomes too deflationary, which means there won't be enough tokens to invite other users. Users means adoption. And where you have adoption, you have use case, you have application, and application drives value. So if the token remains deflationary from time to time, a point will come where new investors cannot come in, new users cannot come in, and for that, there won't be adoption, there won't be practical use case, and then before you know, it becomes manipulative. It becomes manipulative because those who hold it or who have gotten in on time, who have large quantity, can start manipulating the price. They can wake up one morning and dump it on the market, right? And then the price drops still. Okay, and that something is deflationary doesn't also mean that it's holding value, right? It may just be for the sake of, the model, the design of the token. It might just be that's how the project designed it to be. Let it just be deflationary, but it's not really solving any problem per se. So that one that is inflationary can even have more use cases and application than the one that is deflationary. So it boils down to the token model by those who designed it. So I hope this helps you and it answers your question. You can also find, like I said, you can also balance things when you go for hybrid tokens. In my opinion, Ethereum falls here and it's a good project. I wouldn't even think twice. This is my personal opinion, holding Ethereum anytime, any day. Solana is also here. It finds itself within this hybrid, having inflationary and deflationary mechanisms. Of course, Polkadot finds itself around this place. So I just want you to do your own due diligence or make your own research and decide what works for you. I hope this helps.
Thank you so much. Yeah, I really appreciate it. You explain, in fact, you really explained more than what I expected. Thank you so much. I appreciate it.
Thank you so much. Yes, thank you for your feedback. I'm happy. Thank you. Thank you for that question. Yes. Any more questions? Okay, Laura said that was so amazing. Even though I met the session halfway, the network wasn't friendly, but however, that was a great value indeed. I wouldn't mind having the complete audio, Well done, Christy. Thank you so much, Laura, for that. I hope you got value. See, that's why the interactive session is very important. In fact, as equally important as the presentation, because then we get to, add more value to what we've learned. So thank you for your feedback, and I'm happy you got value. Yes, the recording will be available, will be posted tomorrow in our community. Yes. Okay, any more questions before we call it a wrap? Remember that even if you don't have a question now, you can have questions later, maybe when you take some time to go through your notes, you might have questions. So feel free to leave them in our community, or you can drop it for me, privately. I'll be available to respond. And then I wanted to quickly mention that we'll soon be kicking off our second session, which we all voted for in our community. So what that second session intends to do is to help beginners. So if you joined us, in halfway, just like some of you joined while the discussion has gone, further, you may want to start all over, to join us from the beginning again. So that's the opportunity we are providing through the new schedule, which is Fridays, 8 p.m. West African time, 7 p.m. GMT. Yes, of course, we started a series in collaboration with Genius Investors. And so after the series, we would kick off. We will make the announcement, give you an exact date when we are going to kick off the complimentary training session, so that those who just joined us can start all over again. And if you've been on the conversation with us, why not? You can also join and refresh your mind. There's something new. There's always something new to learn. Yes, we are all on that journey, myself inclusive. And we are happy here at the BitQueens team to organize this, and we hope that you make out time, 8 p.m. West African time, Fridays. If you're still wondering if our Saturday sessions will hold, yes, they will continue to hold. We'll just continue on the conversations that we are having here. This will be for those in the intermediate level. So those in the beginner level, or who are at the beginning of their journey, will want to attend for Fridays, 8 p.m. West African time. And if you're not already part of the Resource Hub, this is a call to join the Resource Hub, because that's where we drop happenings within this space. Remember, there are certain things that we may not have the opportunity to discuss in our training sessions, but are happening that will help you also make informed decisions. For instance, news that is happening, new developments. I think recently we talked about how Bolivia has lifted the 4-year ban it had on the use of cryptocurrencies. You can see that means that more countries are adopting the use of cryptocurrencies, which will also mean more use cases for women in particular. So all these things, you need to learn it, because news informs how people react to the market. If you're not following the trends, you're not following the news, well, you might be missing out on a vital part of your learning. So if you're not already part of the Resource Hub, the link is already in the community, but I'll ask one of the admins to also repost it so that you have access to it. Then our collaboration with Genius Investors continues. This Tuesday, we're going to hold a session. On Thursday also, we're going to hold a session next week. And then the week after, we're going to conclude. Right? So it's important that you join. Yes, some of the topics we're going to be discussing in that collaboration are topics we've discussed here, but I tell you what, it offers you the opportunity to even deepen your understanding, because we intend to deepen the conversation, since that audience is an advanced audience who are already participating in some of these opportunities within this space. So that will give you the opportunity to deepen your own understanding. So you want to be part of that session. It's 8 p.m. West African time, Tuesdays and Thursdays. We have 4 sessions. We've done 1, so it's remaining 3. We'll keep giving you updates on the times and when you should join in. Of course, the link to joining that event is different from the one we use normally, so you also want to pay attention to that. So these are some of the announcements that we have. I will keep bringing you more as they come up. In the absence of nothing else, I want to sincerely thank each and every one of you for making it out here. Without you, these training sessions will not be holding.
Thank you.
Thank you,
Love you.
Opibiocha. Thank you, Angela, Mrs. Oge, Laura, Elizabeth. It's good to have you, Virginia, and
Thank you
every other
very
person who
much,
may have logged out for one reason or the other. We'll be back again. Next Sunday, we may not hold. Yes, we may not hold, so that it gives us the opportunity to prepare for these collaborations. Yes, I almost forgot to mention that. But after next Sunday, we will continue. But that does not mean we will go to sleep, right? We can, have conversations, maybe ask questions in the community and all that. So let's keep the conversation going. Let's stay engaged and let's stay inspired. On behalf of the BitQueens team, I'd like to say thank you and have a good evening. Yes?
Hello, Coach Christy. Can you hear me?
Yes, I can hear you. Ruka, go ahead.
Hello, good evening, everyone. Thank you very much, Coach Christy, for today's presentation. It was quite insightful. I want to take this opportunity to please ask for more turn-up, especially with the collaboration with Genius Investors, because we are the invitees. So we should encourage each other to participate and encourage others who are not in this community to join as well. And also, Coach Christy, you remember we had a conversation earlier where we decide that some ladies from the group would come up and speak on how the community has influenced them and how much value they've gained from just being part of the community. So I just thought to bring that to your.
Yes, yes. Thank you, Ruka, for the contributions you've made. Yes, just like we've said, we're encouraging you to be part of that collaboration. That way we lend our voice and people can know that, you know, we are making our mark and we are, of course, having in the blockchain space. Like she also has pointed out, it would be nice to have us join because we intend to call maybe a number of us to share our experiences. You know, when people hear about what you're benefiting about our community, it's not just us saying, but hearing from, you know, other members, it will encourage them, especially other women who are thinking whether or not they should start their own blockchain journey or whether or not they should join our community. So that's why we are encouraging participation so that in those sessions, you can maybe in a minute or two share your experience with the audience, what you're, you know, since being in the community and what that has contributed to your blockchain journey. So yes, thank you, Ruka, for bringing that up. We hope to see an improved participation in the collaborative sessions going forward. So thank you everyone who made it here. That's all for now. There's nothing else to say. Let's continue the conversation in the community. And if you have any questions or anything, please always feel free to ask. We'll be there to respond. So that will be all for now. Have a good evening. Bye-bye, everyone.
Bye-bye.
Bye, Angela. Bye, Mrs. Oge. Bye, Anyoma, Laura.
Bye. Thank you very much.
Yes, thank you, Angela, for always being here.
Thank you.
Good night.
Good night.